Hi everyone. In today's lesson, we will talk about Fibonacci tool. The Fibonacci retracement is to determine price reversal levels. Not only that, but this one indicator can also be used to determine areas of support and resistance. If used correctly, this can supercharge your trading performance. Let's just head to the lesson. Fibonacci is based on series of numbers developed by Italian mathematician Leonardo Fibonacci in the 12th century. These numbers are used to calculate strong retracement level after significant uptrend or downtrends. The Fibonacci retracement tool identifies the levels with the highest chance of reversal while establishing precise support and resistance levels. In terms of price retracement, 0% is at the end of the trend. As we can see here, we have got 0. High if bullish, low if bearish, with no retracement, while 100% is full retracement back to the price point of the start of the trend. So here we have got the picture of Fibonacci tool. On the right side, we have got few of the lines and the numbers. I will just discuss about these lines and numbers. Fibonacci ratios. Fibonacci ratios are mathematical relationships expressed as ratios derived from Fibonacci sequence. The key Fibonacci ratios are 0%, 23.6, 38.2, and 618, 50, 100%. They are potential level of support and resistance. Fibonacci can also be used to determine entries and exit. So here, if we look at the example, we have got a few of the numbers which we were just discussing. We have got 0 somewhere here. Here we have got 38.2. Here we have got 50. Here 618 and 78.6. And here is the 100%. Fibonacci can also be used to determine entries and exit. 38.2% usually the most common retracement. So this level is most usually the most common retracement level. 50% medium pullback area before a bounce. Here we have got 50. 618, the strongest pullback area before a bounce. 786, a common indication of trend reversal, and sell orders should be tight. Okay, so what are these numbers? How we are predicting about this area is the strongest pullback area, or this is the area where the price should hold. So basically, Fibonacci tool is imaginary support and resistance level. Let's say the price starts moving up on an asset, and there comes a point where we see a level of resistance. So that price need to pull back now. When the price will pull back, we will draw this fib tool on our chart from pivot low to pivot high. And once the price will come to these areas, 38.2, 50, or 618, we will be expecting price to hold these areas and just move back up again. Some trader use these as indication of where market is likely to go. If this tool sounds difficult, just stick to this lesson, and at the end of this lesson, I am sure you will have an idea how this tool works. This is very simple and easy. Even it is derived from mathematical relationships, but we are not going to do any calculations here. So even if you don't know about maths, you don't need to be worried about it. Just try to understand the concept of this tool, how this tool works. Let's just draw the Fibonacci tool on our chart first. Here we have got the Fibonacci section. Open the section, you will find the Fib retracement. Click on that, you will find a Fib retracement tool. You need to click on the pivot high to pivot low or pivot low to pivot high on your graph. You will find all these numbers and the lines on your chart. Once you double click on this, you will find the setting of this tool, and you can change the colors according to your liking. How to draw Fib retracement? Fibonacci retracement is calculated by taking the absolute low and high points in trend from wick to wick. Once these levels are identified, horizontal lines are calculated and used to identify possible support and resistance levels. In a bullish trend, draw from low to high. This is the bullish trend. Draw from low to high. In a bearish trend, draw from high to low. In the bearish trend, draw from high to low. Here we have got the example of bullish Fibonacci. Let's say the price started moving from this area and we had a rejection somewhere around here. Now we need to select Fibonacci tool, click on the pivot low right here. One click will be here. The second click right on the top from where it got rejected. Once you will click here, you will see there will be lines and the numbers will be placed on your chart. Now we consider these areas that price may come down to these areas and reverse from there. Here we can see the example. The price got rejected here and the price came down, held on the zero point 0.5, which is 50 level, and the price went back up. So as I said before, this is something like imaginary support and resistance level. We can use this tool by combining with the other tool, and we can take a better decision in the market. Either the price is holding somewhere and it may reverse, or we are just heading back down. I will explain this thing just in a practical, and you will see how this tool works. Here we have got the example of bearish Fibonacci. The price started heading down from right here, which is pivot high, and we held somewhere at here. So we will draw our Fibonacci tool by clicking on the pivot high to pivot low. And this Fibonacci tool will be placed on our chart with the numbers and the lines. Now we wait to see either we are getting rejected from 0.382, or are we going to get rejected on 50 or 618. So we need to consider these three areas. If price is holding at these areas, there are more chances the price will go down further. Important Fibonacci information: never depend on fibs alone to make a trade. It is best used in conjunction with other indicators. Traders will use Fibonacci levels to calculate the best price for their stop loss. Depending on the entry, they will use the next level of Fibonacci to place their stop. Remember, after every push, whether up or down, there is always a pullback. As we all know, market never go up straight in a line. So we see the price moves up, the price comes down, then price goes up. We create higher high, higher low, or we create lower high and lower low. So there is a pattern in which the market moves. You will never see any asset in any financial market where the price will head from 1 to 1,000 and will never come back. There will come the time where the price is going to get rejected and we are going to head down. You will find that Fibonacci is a powerful tool to determine the size of the pullback before either continuing the previous trend or creating a new and reverse trend.